So we'll kind of just go through quickly on some of the bases. It seems like that most of you have a lease, but we'll kind of get in. So if you have a business, and some of the basics may not even apply, but our thing is the basic plan of when you want to get in and open up a business is a business plan. And you kind of want to know why. It really helps you define your business goals, who your team is and your management, the products and services, what's your financial plan, understand your audience, and know your marketing competition, and that always leads to success. So we really kind of, when we start working with local tenants, regional tenants, national tenants, we kind of really want to help them understand the full aspect of what their business is really going to entail, because the real estate side of it is the critical part of it. If you're based on bricks and mortar, but understanding how your business operates and who your customers are going to be is what really is key recommendation for us when you're doing, when you're opening up a business. But a lot of you have that basic already. So once you get that realm down of what your understanding of your core business and what your goals are, then you kind of look at the real estate process and what that next thing is. And choosing the right property is really going to depend on your business. So is it Marnie? Is that Marnie? Okay. So if you're doing retail, choosing the property would depend on, all different aspects. So if it's, it's always has been said location, 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 and retail is kind of that rule of thumb. But if it's a different business, it's not necessarily the correct location, location, location. If you have industrial warehouse, it's a little different. If you have office and services, it's a little bit different. And we can kind of go into those differences. And again, I'm not sure the audience, if it's more retail or if you're kind of more broad, but we wanted to kind of go through the different factors of, what it would be if you open up a bricks and mortar, what that steps are. And location is very essential when you're opening up a retail business, because you want that visibility, you want ample parking, you want the walkability, you want to be able to cross over with other tenants and understand who's going to be your customer that's going to shop with you with the other co-tenancy. Space layout modifications of the space, zoning is going to be key for tenants with depending on the business and retail as well. Again, going back to, do you go into a shopping center? Do you go freestanding? Do you go with a grocery store? Do you go in with Target? Do you go in with Kohl's? So there's a lot of different factors for a retailer on what they really want to do. And it really is, will your customers come to you? Depending on where that location is going to be key. So in retail, location, location, location is absolutely the rule of thumb. And then if you get into offices, offices is quite different than retail. It's going to be key for your employees and your customers. Is it easy commute? Can they take the transit to get to your office? Can they walk to amenities to go get lunch? Can they shop at lunchtime? And then the other key component to office is how your layout is, your design. Are you designing it for your customers? Are you designing it for your employees? So the office is a little bit different than retail, because retail, you want your main focus is customers. Office and professional settings are going to be about your employees more, and then also your customers if you have them coming to your, to your space. And then the next one is industrial warehouse manufacturing. Location is important to manufacturing because you have deliveries and because you have most of the time you're just in and out with product. So the key part for this is location, but it doesn't have to have the visibility. You don't need the walkability like retail. Being on a transit would be helpful because then your employees can kind of come and go as well. And then on the warehouse part of it is understanding layout. What's your building requirements? You have to have ceiling heights. What are your loading? So there's a lot of factors with having a warehouse space. So if that's your business, then it's very a special niche compared to office and retail. And then the biggest thing is in manufacturing warehouses, does it meet zoning regulations? So that one gets a little more tricky because warehouse and manufacturing, you have to be in a certain zoned area to operate such business. So those are the key differences for them. And when you're looking at it, when you're designing your space, every business is different. So your retail, office, and industrial is going to be very different. How do you do it? How do you lay out your space? Do you have to have product in the front? Do you have to have product in the back? Do you have to have product at all? So when you're going in and designing your space, you'll look at your layout and kind of figure out, take in the factors, what's important to me, what's the best layout, what's the best design. And then you'll have to understand the build out cost, what that is of going into a space. You know, sometimes there may be a raw shell on retail and you have to build it out. And we'll use as a restaurant as an example, you have to have a hood, you have to have a kitchen, you have to have, you know, bathrooms. There's a lot of different, you know, build out options that you have to consider on a retail. Now, if you look at industrial, it's going to be wide ceilings, it's going to be wide open, it'll have a loading dock, and they'll have racking systems throughout. So, and maybe a bathroom. I think we have one space, Madeline, don't we, where they don't even have a bathroom in their industrial space. So it's a big difference between what your use is and what you're looking to open. And the other question is, when you're designing your space, is the landlord going to contribute? Will they help you build your space out? Will they make contributions? Most of the time we push as brokers to get you the best amount of TI, because at the end of the day, once the space is built out, you're leaving it for the landlord. So we really try to push to assist when we're working with our tenants to get as much TI. And if it's not TI, can we get them free rent to help offset some of that cost? Because again, you're leaving it in the design aspect of it into the space. Now, a lot of times they won't pay for, you know, your furniture, your fixture, your, you know, those type of things, because most of the time you take them with you. But those are just some of the design aspects of it, of when you're building your space out. And again, it'll vary and swing depending on your business.
So it sounds like you're saying, Loretta, that there, as far as a best practice in commercial real estate, that you do see landlords sharing some of the cost with build out. Give us is there a percentage on that? Give us if a tenant's looking for a great landlord, what would they look for?
As far as it relates to tenant improvement allowance or allowance for the tenant, it'll really vary, Maggie. It depends on what the current condition of the space is in. So say that, let's just use retail as an example. So you have a retail space, it was a boutique, the ceiling's in, the lighting's in, you know, the bathrooms are in. Now you just maybe want to update the floor and do some painting. If it's that, sometimes you'll get $5–10 per square foot. Now, if it's a shell that's never been used, again, that'll vary. If it's a retail, and construction prices are a little bit high right now, so it's kind of like I'm going to do a range, and it could be from 45 to 65 to get it to a vanilla shell, which was what I had just mentioned: the ceiling, the lighting, you know, your bathrooms, your HVAC, all of those things. So then it would be 45 to 65, which the landlord should participate in getting you to almost a vanilla shell. In almost every case, when you take a space on, they should offset the cost to get you to a vanilla shell, which includes the basic build out. Anything above that, if you have certain requirements that you need, then that's a negotiating point. At that point, then they go, okay, we'll give you $10 extra, but you're going to pay us $1 more in rent. So it varies space by space.
Thank you.
So we'll talk a little bit about the financial understandings, a little bit about that, in that, you know, kind of what you had just brought up, Maggie. And this is for the lease part of it, but I think it's really the overall of your business, of the financial understanding for when you're opening up. How long of a term do you want? Is this short term? Is it long term? And Maggie, those numbers will be adjusted. The allowance will be adjusted based on your term. So if you say, hey, I only want to do 1 year, And they're going to go, you're not going to get anything. We can't give you that. Because they really kind of want to roll that allowance over the term of your lease. And if you're not giving them a full term, then you're not going to get you won't have the leverage that you would have if it was a long term. So that the term of your lease and the term of what you're looking to stay in that space is going to drive a lot of your other financial aspects of it. Your rent, it'll drive, what the allowance you're going to get, free rent if they're allowing any of that. So, when you're doing the new business format, your best is if you can do a longer term to allow you, get, better return.
And when you say longer term, are you thinking 3 years, 5 years, 10 years? What's your
5 to 10
for retail space? What's your usual?
A typical long term is the way landlords look at it, and even lending institutions kind of look at it, is a 5-year and a 10-year. Now you'll have some that'll come in and go, okay, we'll do a 7 because we can't get comfortable with either one. But recently we've been seeing a lot of 1 year, 3 years, and given where we are today, I think that a lot of people are only comfortable with that. And it's hard because a lot of landlords, if they have financing on their property, a lot of these have to go through their lender to get approval. And some of them just can't get that 1 year deal approved. But here lately, they've been kind of willing to do that, but.
Thank you.
And the other key thing too, and it kind of goes back to your business plan, is knowing what your sales projections are. Because you're always going to be able to know what your operating expenses are, so you know what you can afford for your lease too. So, if you're spending, your leases and all of your expenses are 100,000 and, you're going to make 120, you have to adjust. So the one thing that you can adjust and have a little bit of flexibility with is the rent and your expenses. So that's probably one of the key things that probably should have been the number one on that financial understanding, is understanding your sales projections and what you think your revenue is going to be. And again, going back to the business plan, knowing what that is going to be the key part of it. And then Madeline is going to get into a little bit further about the buy and lease, which I think is going to help Marnie, is to understand what the pros and cons are of buying and leasing. But does anybody have any questions on that? I know we're trying to do an interactive, so I don't want to kind of just skid through this whole thing. No? Okay. So I think this part of it is understanding lease negotiations, and I think this is probably maybe key to a lot of maybe tenants that are on the call, is understanding lease negotiations. So typically, before you even get to a lease negotiations, you want to know what your business points are, and you define those in a proposal. And most of the time, we recommend having a professional, advisor, whether it's a real estate broker, if it's a attorney. Attorneys, you have to pay them. Ours is differently structured. We don't make that hourly basis. We're based on commission, and when it's done, that's when we kind of make our fees off of it. But so I would recommend having an advisor to walk you through your proposal and LOI, just to understand what those deal points are. Understand the rent. What are the escalations? I have to pay 3% a year on escalations. Why? And you have flexibility with landlords to negotiate those points. So an advisor can help you what those key points are as far as what you can get from a landlord. So I know a lot of people don't feel that it's necessary, but we just really, the value that we provide is knowing what those deal points are that the landlord is willing to give on. So, understanding what those, deals points are in an LOI, it's all business terms. And then you kind of go into the lease, and then you want to understand the lease. So is your lease a triple net? Is it just net? So I'll give you an example. Retail space is typically triple net, which is your common area maintenance, your taxes, and your insurance. And they pass all of that through. So the landlord's going to pass all of those through to you. If you have a warehouse space, it may just be net, which is most of the time your taxes. So they can pass through taxes, they can pass through insurance, they can pass through the common area maintenance. It'll vary. So each scenario will be different. So understanding what your lease is, because that'll affect you. We had a client recently that thought it was just a full service lease, meaning that everything was included in his $3,000 rent. And he received a bill for, what was it? $15,000
for utilities.
For utilities.
Didn't see it coming. And his lease, we actually got a hold of his lease, and his lease did read that he was responsible for utilities. They had just not been back charging him.
And they had went back and charged him for 3 years. So understanding that part of it in your lease to know exactly what your charges are, because you don't want to get hit with that.
Yeah, and this individual did not use a real estate agent his first go around. He has since hired us to help him out. He thought he had it under control, you know, the first go around. He's got a very successful business. He's an industrial user, been growing exponentially, I think, during COVID and everything like that. But, you know, this is a mistake. It can happen. And it's just one of the values that we can provide is making sure that's, you know.
So understanding your lease is very critical on what the outcome could be and what they can come back to you and charge. And then the other thing in the lease is, do you have to pay percentage rent? This is typical in retail leases. It's not so much typical in office or industrial, but percentage rent is basically a portion of your sales you have to give to the landlord. It's changed a lot over the last 30 years that I've even been doing business. It's been going away a little bit more. You'll see it more with some of the nationals, some locals they've tried to do. But for us, we try to take that out of the negotiations. You know, I don't know how it's fair that that landlord can collect some percentage rent, but we try to support that on either side that we're on. But, you know, that's a key question because that impacts your sales projections. If you're not aware that you have percentage rent in your lease and, you know, you do 200,000 over your projected sales and they're going, okay, you owe me 6% of that. And you're going, wait a minute, I had to pay my employee. So that's a key point for understanding a lease.
Is that
Can I
the same?
ask a question on percentage? Oh, go ahead, Marnie.
There you go ahead.
Oh, I was just going to ask on your percentage rent for your landlord owner clients. How do you find that they monitor the sales numbers? Are they asking for quarterly books? Are they asking for access to, say, the retail establishment's point of sale system? How do you find the monitoring on that best achieved?
Typically what they'll do is ask for either quarterly or annually sales projection or your sales numbers. And most of the time, it depends on how sophisticated. Some of them will just ask for your register receipts. Most of them will want a CPA that has done and certified your, you know, what your volume was for the year. So the most time they'll ask for that as well. Just kind of your, you know, annually number, and it'll be certified by a CPA or your accountant or whoever does your, you know, your books for you. And then they take it from that and base it on, you know, whatever that number is in the lease and base it on that. But it varies per landlord if they want it quarterly. A lot of locals will try to even if you don't have percentage rent, a lot of locals will even want to see your sales because that way they're gauging, are you going to stay? So we're seeing more and more of landlords and local and even national level going, hey, we want your sales numbers. And tenants go, well, why? I'm not paying percentage rent, and they want to gauge how well you're doing. And it's just a, you know, kind of a keeping a pulse on their heartbeat of just how well they're doing.
Yeah, I know it's totally variable, landlord to landlord, contract to contract, but with percent rents or percent leases, are you like, do landlords try to include, clearly a landlord will try to include anything. So do they include like e-commerce sales? So if you're a retail place and you're ordering both like physical, you know, brick and mortar and on e-commerce, or is it pretty clear that it's like separation of those two channels that sales come through?
Most of the time, they'll even, if you have a Coke machine, a lot of landlords will say, I even want your revenue of what you're taking out of that Coke machine. If it's, so it'll vary, but most of the times they're saying now any sales that's in your store or in that location, they'll record it as that's part of your sales.
Even if it's sold online and coming out the back, just being delivered, being put on a truck and sent to your house because you ordered it online.
And it never used to be outlined, and now we're seeing the e-commerce sales to need to be included. And again, I saw one recently where they had a vending machine that sold candy and soda out of it, and they wanted that to be included in with the sales.
Quick question from the chat, and then we'll go to Marnie's question, but what's the range of percentage sales that you are seeing right now? So what's
varies.
expected?
It varies. The average, I would say, right now is about 5. They try to get more on restaurants, so you'll see 6, 7, 8. They'll try to get for restaurants, and retailers, 5, 4, 3. It varies, but I would say the average is about 5. But it's again, it's interesting over the years of how it's kind of not going completely away, but I think eventually it may get to that point. And landlords are still going to want to see what your sales are based on what my earlier what we were talking, but I think eventually that may just kind of go. It's a lot of monitoring, it's a lot of administrative in the back end to determine on both the tenant and the landlord side, who owes what and that kind of thing.
Marnie, did you have a question about pass-through?
Yeah, is that like, we were talking about pass-through expenses, is that like they're passing through the real estate taxes? Is that what you were talking about as far as that one person getting the $15,000?
Yes. The triple net is the pass-throughs. Yeah, the triple nets are the pass-throughs of your common area maintenance, taxes, and insurance. And again, sometimes they'll even include, if the building is not on a separate meter of water, they'll even include utilities into that number sometimes as well. And most office buildings are, I'm thinking that most everybody on here is probably retail, but if in office, most of the time it's a gross number. And that means your electric's in there, your water is in there, and they pass everything through as a gross number. So it's not separated out. Your rent is 33, and that includes all of those pass-throughs. So office is a little bit different when it comes to the charges.
Thanks.
We have a duplication in here, so sorry. You want to clarify when you're doing a lease. The other thing that's very key is understanding who is responsible for repairs and maintenance. And I can give you an example. I'm working on a freestanding building right now, and the tenant has been in there forever, and the roof is leaking, and he went to the landlord and said, this is your building, replace the roof. And they go, nope. In section 10.4 in your lease, it states that you have to replace the roof. So to me, this is very important right along with your rent and your business terms, understanding repairs and maintenance, who will be responsible. Because you just kind of don't want to get down the road 5 years in and the HVAC breaks and you're like, oh, well, that's the landlord's, they should replace it. Most of the time it's in the lease of who is responsible. So that's kind of a key point too in your lease negotiations to make sure that's outlined.
Excuse me, Loretta, what do you advise your clients as far as, I think in Ashland, we're seeing that the landlord's going to be responsible for the shell of the building and everything else will be the tenant. Is that what you would usually recommend, or what do you go for?
Yeah. Most of the time it depends on the building. So if it's freestanding, a lot of those leases would be a ground lease and the tenant takes care of everything, even mowing the lawn. And that's the ground lease just relieves the landlord of anything because they're basically the tenants using it, they should be paying for it. If it's an inline space or an end cap space in a retail shopping center, the tenant is typically just responsible for his inside. And the landlord is responsible for the roof, the walls, the plumbing, anything that's outside of the tenant's space.
Yeah, where all the hookups come in, basically, for the plumbing and electrical.
So, on even in industrial, most of the time, they don't do it as a ground lease, but most of the time, if they have the building themselves, they take care of everything.
Mhm.
So it's just really case by case, depending on what type of product it is, or the building, I should say, not product, but.
Thanks.
No problem.
And then the other thing is key, and this is where, my recommendation is when you're negotiating a lease, is really have an attorney, because there are a lot of legal languages in there that could be, obligations on your part and the landlord's part, and who is going to be responsible. Can you sublease? So I've got double words in there. Can you sublease? What if you're not making it, or you have to move and you have a family issue? Can you sublease that space, and who can you lease it to? Can you close at certain times? There's a lot of language that's in the lease that's legal that you want to make sure. So business protection, indemnifying yourself, indemnifying, your employees, that's very key. But I'm not an attorney, but I would recommend that when you're doing lease negotiations, really to have someone review it on the legal side of it, because you just don't know what you could be obligated for. And then managing existing leases, I kind of wanted to just keep this open, because I'm thinking maybe people may have some questions in the room. Managing existing leases are case by case. One of the examples that we were just talking about with Madeline was the tenant that had the industrial space. He was already in a lease and he didn't know what to do. He had no idea with this bill that came in. He didn't know how to address it. He went to the landlord and he's like, well, here it is. And sometimes we can advise and help on that. An attorney can sometimes advise and help you with the existing leases, or you can directly go to the landlord themselves. So a lot of times the landlord prefers you deal with them directly and not bring us in.
Yeah, actually, well, if I interrupt, I can go ahead. It's actually a really good example, this industrial guy. So in his situation, he tried to bring me in, he already is in a lease. He wanted to expand within the property. He got in a situation with the utilities. The landlord had sent it to him, and his landlord, was kind of like, why didn't you come to me before bringing an agent in? And that happens, and so basically I told him, at this stage, for, getting the help you need and the assistance you need to hire an attorney, because at that point, an attorney is going to be able to, legally go through that document. Attorneys on both sides, the landlord side and the tenant side, can talk to one another versus, me stepping in and forcing myself in, when the landlord is kind of like, where did you come from?
Yeah.
But yeah.
So that's kind of the pros and cons to it too, is, the pros is dealing with the landlord directly. Most of the time they'll work with you because you've been a long-standing tenant of theirs. So they're really most likely going, okay, I want to work with you. And then you have the ones that are going, I don't want to work with you or your agent or your attorney or anyone. So, so it'll vary case by case, but I didn't know if anybody had any specific questions. So I kind of really wanted to leave this one open, because it is really case by case.
Yeah.
And landlord really is the one that'll, they drive that
how it's
boat.
going
If
to
you're
go.
an existing tenant, if they're, we have a document, they're our tenant, not your tenant. And, but, I don't know if anybody has any questions.
Any questions on that right now? And you can always,
Yeah.
if you've got a one-on-one, this will be a good time to remind everybody, if you have really specific question or something you want to handle one-on-one with our experts here, we are taking appointments for them for Thursday and Friday afternoon. And so that same ashlandvirginia.com, you can register for your one-on-one appointment. But are there any questions right now for discussion about existing leases and landlord negotiations?
Or even hypothetical.
Yeah, I mean,
it could be hypothetical.
Yeah. I mean, just feel free. I mean, we've been dealing with a lot of the COVID stuff, and I think that's probably been the most important questions, for tenants of what can I do, but the municipality, the counties, the landlords, the government has really stepped up through this and really have tried to help the best that they can with the PPE and really helping them get through some of the process with some of the leases. And, for the most part, most of the landlords that we've dealt with have been very gracious and really have been tried to work with the tenants with managing their existing leases. I'll give an example, and this may open up a question, one-on-one or later down the road is, hey, we're giving you free rent for 6 months because of COVID, but we're going to put 6 months on the back end of your lease. And, you kind of go, well, I wanted to leave in end of my lease, and now I have to commit to 6 more months. How do you do that? So there's ways to kind of suggestions, recommendations of how to not have to tack that on. So that's just one example that I just kind of wanted to, mention. So we're going to go into.
Did anybody have any questions? Wanted to make sure.
I think too. So I'm going to turn this one over to.
Oh wait, there is a question. Hang on just a second. One question.
Okay.
I had a question about the personal guarantee that sometimes is written into a lease, and is there any good option or a good way to extract your personal stuff away from your business stuff?
First, will you explain what a personal guarantee is, and then answer her question. Thanks.
Oh yeah, if you can explain what a personal guarantee is first.
Yeah, I can do that. Actually, Dana, I want to apologize because that should have been in with the lease, and that's part of the other obligations. But the personal guarantee gets really tricky, and especially hard for startup tenants and locals that are looking to kind of open the business up. The best way of trying to get around it is they base it on, what do I have to put out of my pocket? What risk is the landlord taking to bring you into his space? If he has to give that TI that we talked about earlier, he wants to limit his risk of getting that back. So most of the time, that's when a personal guarantee comes in. It's not even just for the rent, it's really out of the pocket. If it's just rent, I typically try to negotiate it down instead of doing a full personal guarantee, of making it what you're comfortable with, of 1 year rolling. So there's variations of a personal guarantee of what you can get the landlord agree to. It's all going to be a matter of what his risk is. If he's giving you $5 in TI, he's going to figure out how he's going to get that back if you leave him. If it's a $50 TI, he's not going to let you leave. No, I'm kidding. But so it'll vary on the personal guarantee, but it really is about the whole deal. It's the whole deal structure. What you're paying in rent. Sometimes if you pay a little more rent, they may forgive and not do a full guarantee. But yeah, Dana, good question. And then, if you have any questions afterwards, let us know. But yeah, that one's a little, a case by case as well. So,
Okay.
but we're going to kind of go, and Madeline's going to kind of go in a little bit on the leasing and purchasing, and how to optimize and what the pros and cons are versus, leasing or buying a property.
All right. There we go. All right, so optimizing by leasing a property. We're going to start with the pros. I'm just going to go ahead and click through them so we see all of them on the page. I tend to get behind myself when I'm clicking through PowerPoints. So flexibility is, the first of the pros. I would say, you are not, stuck with your property. You sign a 5-year deal, you can leave at the end of 5 years. You're not locked into a mortgage, and, you certainly, if you outgrow the space, a couple of years down the road at the end of your term, you can move. So flexibility, I think, is probably, the biggest thing with leasing. You are not stuck, running with the property for however long, paying your mortgage and everything. Fixed monthly cost, kind of like what Loretta was talking about. This is a little bit more complicated. It is, in fact, a fixed monthly cost. You know what you're going to expect every month. You're going to pay, whatever your base rent is. And then, if you are paying triple nets, Usually those don't vary too much. They can year to year. It just depends on whatever the landlord is putting out. Expense, you know, if there's a year that had a ton of snow and they spent a ton of money on snow removal, you know, you might see some variations year to year, but it is very much, you know, it's an expense you're going to expect every month. And it's, you know, outlined in your lease. Location, when you lease property, you know, you can pick and choose where you want to go, you know, whether you can't, you know, maybe you can't afford to buy a building, you know, in Short Pump, but maybe you can afford to lease it. You know, so there is more flexibility in, you know, picking a location, which is great. Tax breaks, you know, when you do your taxes, you know, in the spring or whenever, you know, fall, whenever you choose to do them, you can write off, you know, your monthly rent, your rent, your utility and insurance expenses. So those are all tax write-offs that you can do when you are leasing a property. Financial freedom. So you're not, you know, the only money you're really spending, and this is obviously dependent on if a landlord provides you with the tenant improvement allowance or not, but you're only really spending, you know, the money to get your business open, you know, or that is the hope. That is the hope.
Sure.
You know, obviously, you know, there's risk with it and everything like that, but you know, you don't have to replace the roof. I know Loretta gave a couple situations where that is the case with ground leasing, but I think for the folks that we're talking to today, I would hope, I don't know what all of your leases look like, but I would hope that you guys are not responsible for, you know, the roof, the structure, you know, the electrical, you know, all those expenses. I mean, those things break. I just had a client the other day call me who I'm working with. He's a restaurateur. He's been in his space for 2 years and his water line broke just the other day. And he has apartments above him, and I don't know what's going on with the landlord, but you know, they've been without water for a couple of days, and it happens, but he doesn't have to pay for it. Is, you know, is the good news. So we're gonna move on to the cons. Oh crap. Oh no. Let me go back. I'm sorry, guys.
You're asking a question that I have no idea.
Sorry, guys.
Let's see.
Click share screen again. There it is.
Well, while they're working on it, any questions so far about lease versus own or other issues?
I love it. You gotta get back.
Oh, one.
There it is.
There it is.
There
There
it
it
is.
is. There we go.
Sorry about that. I'm gonna let you control the clicker.
You're gonna let me control. You're gonna let me control it.
All right, stop. Oh.
Hang on.
Yeah, if anybody has any questions, there's only 3. There's just 3.
Technical issues.
All right.
All right. Yeah, and then share screen again. Perfect.
All right, let's get back and we'll share it again.
That and then just click start PowerPoint.
Okay.
And then click,
Okay, now we're back. Sorry about that.
click start up in the top. All right, so we'll go ahead and get started with the cons. So obviously you don't have any equity in your asset. And I know that we talked about this, you know, on the other side with the pros, you know, you have more financial freedom, but not having equity in your asset, you are making permanent, you know, a lot of times making permanent improvements to the space. And, you know, when you do that, it's not coming back out. It stays with the, you know, it's improving the landlord's property, the person who you are paying rent to every month. It's improving their property. It's not improving your property. So that is a downside. And you also don't benefit from property appreciation, which goes hand in hand with, you know, you're making improvements, you're bettering the space, you are bringing value to whatever, you know, if it's a block or if it's a shopping center, you're bringing value to this property. Rent escalations. So Loretta touched on those earlier, I think. So escalators and rent right now, 3% is kind of the market rate, but you know, When you
That's
look
annually.
at annually, excuse me, I should say, we do see sometimes, 2 to 2.5% annually. And then also, with national retailers, we'll see where they do larger jumps where, if they're signing a 10-year deal, they'll, it remains flat for 5 years. And then in year 5, it jumps 10% or 12% or what have you. And then in year 10, if they renew, it'll jump again. And that's typical. I mean, I don't work with a ton of national, Loretta works with more national retailers, but it's something to think about. Your rent will be going up. It's all about, the negotiating.
Yeah. Well, it impacts your sales. So as your rent increases, your sales need to increase to offset that cost. So that's one why, it's outlined as one of the cons, because as your rent keeps going up year over year over year, well, your sales has to too, to be able to cover those increase of expenses.
And so rent is not listed on here, but I want to touch on rent. It can be a con in that, if you think about it as an apartment today, I mean, if many of you guys have looked at, what apartments cost in Richmond right now, it's insane. Most people are paying more than what they would be paying for a mortgage payment. And that goes hand in hand with commercial real estate. Depending on where you are, you might be paying more than what it costs. If it's a freestanding building, you might be paying more than it costs just to pay the mortgage for the property.
It'll vary market to market depending on market rents.
It definitely will depend, Short Pump versus Ashland. I mean, I would say Ashland's pretty hot. It's, its own little center, tight little center and everything like that. But, Short Pump, downtown Richmond, the Fan, Scott Station, I mean, it just all varies. No control. Once you sign a lease, it's rarely modified unless, of course, you're building a space out and, the landlord has given you some free rental periods. You build out, the space, and maybe you needed an extra month. So the landlord will agree to do an amendment to the lease to give you that extra month, or, in some instances, if there's a renewal, you'll do an amendment. So if, you're renewing for an additional 3, 5, however many years. But other than that, modifications are generally not made. And then if you go out of business, you're going to have to face the penalties, of course. We touched on the personal guarantee thing. That's one way landlords, try and recoup, rent and stuff like that. I have seen instances though with some landlords I've worked with, and also some tenants that I've worked with, where, the cost for them to go after you is it's just not worth the time, and they will just simply let you out of the lease. But I like to tell, anybody I work with, just don't expect that, not everything is, rainbows and, everything like that, but just something to consider though. All right, purchasing. There's 5. Okay. So the pros for purchasing, so you're building equity, obviously, you are putting money into something that we hope, and I think, for at least in Ashland especially, it is definitely going to, it'll appreciate in value. And it also, by building equity, it's a future form of collateral that you can use when you're financing, whether it's a car or house, if you own something, obviously you can put it up as collateral. Appreciation. So obviously you have capital appreciation over time. Like we said, we hope, but again, Ashland, if we're talking specifically about Ashland, it is a solid area. I think the improvements and everything that have happened in that area, right there at England and Route 1, for example, they put all that new signage in a few years ago. Ashland is just, it's a lot has been done to it, and I think it's going to continue on the up and up. I can't say that for other neighborhoods, but I can say that for Ashland. I'm from Ashland. I forgot to say that at the beginning. Yeah, with appreciation, when you have, we'll actually touch on this in a second, but if you have multiple tenants in there, and they're putting their money into your property, that's going to appreciate it. If you're going to be the one who's who is occupying your building. You benefit, you can benefit when you purchase the property from getting owner occupant financing options, which I encourage you, if you were to decide to do that and occupy your space, to talk to a mortgage lender and get all your options. Don't just pick the first option, because there are a lot of programs out there that work for that. Tax deductions. This one is, it's not, you can obviously write off, your interest payments, but other benefits are, if you already have commercial property, you can avoid capital gains tax by purchasing, moving money from one asset to another asset. I'm blanking with it. I guess you can write off.
Just owning the property alone
Yeah.
provides tax deductions across the board. I mean, you're owning your own business, you're owning your own property, so it just adds more value, but
yeah. So fixed overhead, you want to know what your future costs are, and when you own a property, mortgage rates and stuff like that, you're locking yourself into a 15-30 year, maybe less loan. It's predictable. Very similar, like we talked about with a lease. We know what we're going to pay every month. But with leasing, the difference is you don't know that you're going to be able to continually renew the space. You know that you're going to have this building 15 years from now, but you don't know if you're going to have your space that you're leasing. You don't know if you're going to be in that space 15 years from now, because if the landlord kicks you out, then you have to move on. So, there's benefits there. Passive income. If you have other spaces, we were just talking about this. If you have other spaces available in your property, you can lease them out. That's going to go towards your mortgage payment. That's going to benefit you. That's just a bonus, basically. If you buy a property that has multiple spaces in it, and maybe you only are occupying 50% of the building, that's just an added bonus. So we will move on to cons. There's 3. Perfect. Okay, maintenance cost. Obviously, as we were talking about on the leasing side, the landlord generally is going to be responsible for the the roof, the electrical, and the plumbing, all those hookup connections. It differs by property, like we talked about, but since we're talking primarily about retail right now, if the roof starts leaking, you got to go and fix it. You don't want to be upsetting your tenants, and having water leak into their space. That's just going to give you a bad rap as a landlord in general. But also, if you're the one occupying the space, that's just going to hurt your business. But you have to keep in mind, that, those expenses come up. I'm sure most of us own a house, what have you, and it's the same thing. The HVAC breaks, you got to fix it. If the plumbing line cracks, you got to, it's just one more thing. So also management fees. If you do have a multi-tenanted building, those fees do run anywhere from 7 to 10% of whatever your income is that you're getting. And this is passive income that we're talking about. And, property management. For example, I actually manage apartments for my family, and I actually do it myself just because I have the time. I actually live in the neighborhood where they're located, but a lot of people don't want to do that. They want the hands-off approach. Hand it to a property manager. They're going to give you, all of your spreadsheets with all of your rental income, and you just hand it to your tax accountant when it's time to, file everything and it's good to go. Higher upfront expense. We're almost done, guys. Sorry. It can be difficult, obviously, to qualify for financing. Like we talked about on the leasing side, maybe you can't afford a building in Short Pump, but you can afford to lease one. So, this is obviously a con. It's difficult. Just one of those things. Larger down payments usually occur, or you'll see larger down payments, with commercial properties, commercial purchasing, upwards of 20%, even more, can go even higher depending on what your closing costs are. And then finally, the lack of flexibility. which I don't know why it's not up there, but you know, what if you outgrow your space that you bought for yourself? You bought this space, you wanted to occupy it. What if you outgrow it? Now what are you going to do? Sell it? Or, you know, continue operating as a landlord, go find yourself another space. It just depends on your financial position. And do you really want to be a landlord or even your own landlord? Do you want that added, you know, responsibility? But I think, yeah, and so that should about wrap it up. I mean,
So that's kind of the differences between the leasing and purchasing. Does anybody have any questions on that? We kind of didn't want to make it, that's a long topic. So if you kind of go in.
yeah, I know we ran over a little
to
bit.
kind of go into it, but again, we can do the one-on-one offline. You know, Maggie has our contact information. But just kind of lastly, you know, resources and recommendations that we highly recommend in doing any proposal, lease, purchase of a commercial real estate property is, if you're starting out, reach out to Better Business Bureau. They have a lot of resources that they can help with. They'll even give you a business plan online. They have different templates that you can use. They can put you in touch with advisors.
I know you guys can do that too.
It'll put you
Yeah.
in touch with the attorneys. So the Better Business Bureau is a really good place to kind of go. If you guys don't know that yet, seek professional guidance from real estate advisors. You know, discuss with your lender and financial institution if you're looking to either lease or purchase, to make sure that you have the funds to be able to build out, do the things that you need. You know, retain an attorney to read your lease. You know, I know that can be a costly expense, but when you're writing your business plan, put that cost in there. Make sure that is part of your overhead, because it's really critical down the road of how it's going to impact you later. And then just discuss with your contractors and local county officials to understand how to build your space out. You know, just always be in the know of, you know, what you're putting yourself into. That's really kind of what we have. And
If y'all have any
our contact
questions,
information's here. We have emails. And again, Maggie had opened it up to a one-on-one tomorrow and Friday, and we'll be happy to answer any questions. No obligations.
I have a question for you guys on that last slide on the own cons or pros. Do you see most of your small business clients setting up an LLC that they'll buy the property with, and then their business actually leases it from them to try to maintain separation through multiple entities? Or with small business clients, are they typically just buying the business in the building themselves and combining?
Typically, you're seeing them put it into an LLC.
yeah.
Yeah,
And then the
I mean,
business-
and the best thing for that is, and I probably should have put that on the recommendation, is an accountant, and the accountant can kind of go with you on the LLC. Do you make it a corporation? Do you do an LLC, or do you keep it in your own personal? An accountant can kind of go through, well, here's why you want to do it. And then, you know, you write the LLC and you pay yourself, you become your own employee. So there's a lot of different ways that you can do that. But 99% of the time, what we see is LLCs. And now leases, it'll be, you know, if it's a startup, it'll be Brendan Croy doing business as, you know, Fitness X or something. But, you know, that's a lease part of it. But, and then they'll set up the LLC for that business too. But yes, we see that more and more all the time now.